So have you ever found yourself just getting smoked by the market? Right? Like every decision you make just seems to be the wrong one. Large money's constantly just ripping money out of your account. And then you finally get so frustrated, so impatient, so emotional about it that you just hop in the trade. And maybe you make some money, maybe you don't. All just to lay in bed at night to be like, dude, how am I going to keep doing this? Well, this video is for you. I was that exact individual for many, many years. And then I finally decided that I was just going to study one approach for over a year and see if it actually worked. And if it worked, how repeatable would it be? Because the key word here is repeatability. So what you see before you is the data report, specifically for the month of October, okay? I trade the same exact approach every single day. And I would argue that until you trade the same way every single day, you aren't going to get the results that you actually want. See, for me at least, it's got to be simple. If it's not simple, I'm not going to be able to stick to it. I'm not going to be able to respect it. I'm not going to be able to follow the correct decisions, make the correct decisions. It's going to get emotional and I'm going to lose money, okay? I need repeatability. So in this video, that's exactly what we're going to be talking about, and I am going to give you the exact system I use, not just the system, but the results to back it up, okay? So once again, October's been our best month. We're sitting at an 88% win rate. That's 26 setups, 23 of them profitable for at least $1, okay? Now, once again, we need repeatability. So what is the approach, okay? So step number one, we're looking to trade off a key level. A key level or a critical level is going to be previous day high, previous day low, previous day open, and previous day close. Those are four main price points, you guessed it, from the previous day. Okay, so level charting becomes very simple. I'm only looking at the high, low, open, and close off the previous day. Then I look to watch open print. Open print is the 9:30 bell price. Once the bell goes off, we watch open print because once again, we can't predict the market. It's not even our job to predict the market. It's our job to identify what the banks are actually doing. We can't move price, right? We can't manipulate it. I don't care how many people are on your Discord group, okay? You can't make price move. You can only figure out what the banks are actually doing. So for us to do this properly, we must watch levels with excessive amounts of volume. So step number one is identify the critical level. Step number two is identify the moving average cross, okay? So we use the EMA cloud to do this. The EMA cloud is made up of the 5 and the 20 EMA. And then number three, the most important part of this strategy, in my personal opinion, is learning to spot the RBI GBI. Okay, this is an acronym. It stands for the red bar ignored or the green bar to get ignored. And now we do this on the 5-minute time frame. Let me give you an example. Say you got the market trending down. You got yourself a nice large red candle followed by a green candle. All right, maybe it's got a little wick here, maybe it's got a little wick here, okay? So this right here is a green bar. Then the following bar would be a red candle that completely wipes the bottom of that green bar out. Yes, wick included, okay? This is on the 5-minute time frame, and once you get this, this becomes a green bar ignored, okay? This is on the 5-minute time frame. So once you spot an RBI, which would just be the opposite, or a GBI, okay, at that point, you now have yourself an opportunity to identify a trade, okay? You draw a box or a zone around that RBI or GBI. You drop down to the 2-minute time frame, and you play the 2-minute 20 retest. This has been the system that has changed my life, my team's life, completely and entirely, okay? Not only does it give you phenomenal day trading setups, but it keeps you from trading bad markets. And I would argue the reason why I wasn't consistent for so long was not because my inability to make money, but because my inability to avoid trading unfruitful, chaotic, choppy markets, okay? I'm going to say that one more time. The reason why you are not consistent is not because you don't know how to make money. It's because you do not know how to stay away from bad markets, okay? So for anybody that wants more detail on this, that wants a free mini course or more data emailed to them on a weekly basis, Click the link below, put your first name, last name, email in, and I send you the mini course and the data reports on a weekly basis. So without any further ado, let's talk about the month of October here. So once again, we're sitting at a 78% win rate over the last 14 months. We've been collecting data on this strategy specifically for 14 months. 277 trades, 217 of them profitable, 60 of them unprofitable. Now, once again, for us to become very good traders, we need to believe in everything that we do. And what I mean by that is if I have an ounce of doubt in my body before entering a position, I am going to fumble the entry. I'm sure most traders can relate here. We need to believe in what we're doing. If I want to believe in what I'm doing, the only way for me to build that confidence is to actually trust and believe in my strategy, okay? If I'm going to repeat it and I want those good results, I need to understand my strategy inside and out. That's exactly why we do these, okay? And that's why we started out 14 months ago to collect data on this strategy, okay? So once again, for the month of October, we're at 88%. We took 26 trades, 23 of them profitable. Let's talk about some, all right? So right here, 1028. Once again, what are we doing? We are avoiding all of this price action. All right. Why? Because there's no RBI, there's no GBI, there's no criteria. Therefore, there is no trade. Okay. We finally get a setup here right around, what is this, like 10:30. We get a green bar that's ignored. Bam. Short play. Number 2, same trade, different, same day, different trade. Okay. We get a fall down below. We get a bunch of trapped buyers or trapped sellers here down below EOD. All right, we get ourselves a beautiful red bar that gets ignored, initiating the long entry. All right, where's our target? The upside pit number. See, this is why critical levels are so important. All of the volumes there, okay, the liquidity. So if I'm playing the market, it really only makes sense to play pit number to pit number. All right, and for me to understand who's controlling that pit number or that critical level, I'm going to use the strategy. All right, I'm going to use the moving average. I'm going to use the RBI GBI. I'm going to drop down to the 2-minute 20. I'm going to identify the 20 EMA holding, being respected. These are the tools that are going to get you across that finish line, okay? Repeatability is key. All right, once again, another example here. We get ourselves a green bar, completely disrespected, initiating a very nice short play. Now, 10:31, this was Halloween. I really want to talk about this day, okay? So this was a long play. This was a loss. We did not take this trade. You know why? Because the 1-hour trend, the context of the market was bearish. What do I mean by context? Okay, trading is not black and white. It's a very gray game, all right? It's not linear. So what that means is we need to get very good at understanding the communication of the stock market, all right? It speaks to us. Just most people can't listen, all right? How do you listen? Moving averages. The moving averages are going to give you insight. They are going to give you context. And when you learn to use them on larger time frames, such as the 1 hour like we did here, you're not going to trade against the context of the market. We understood entirely buyers just weren't that strong, okay? We were in a downward trend. This red line right here, like this ladder that I've drawn, this is the 1 hour trend, okay? We have an indicator that plots it for us. I am not going to trade against it unless we are very extended from it, and then I would trade into it. But you can see here, this is a healthy trend to the downside here. Healthy meaning no large extension. Therefore, yes, we did get the moving average cross off open print, and we did get a red bar ignored right there. But I still log this for data purposes only. Okay, I like logging no matter what. If my criteria presents, I'm logging it. So we didn't take that trade, but you know what trade we did take? This one. And once again, trading with the context of the market, trading off open print, trading with the moving average cross, and trading the beautiful green bar that gets ignored. And now, once again, guys, the most important part of all of this is once you spot the RBI or GBI, you draw a zone around it. You look for the retest of that zone. It usually lines right up with that 2-minute 20, like the example above right here. And once you see that 2-minute 20 get respected as such, this is where you hop into the market short and you follow the trend down. We trade this live every single Friday. So make sure you like this, subscribe to it, check out the free mini course that I offer. And guys, make sure you are coming into the market this week prepared with your strategy. Okay? I love you guys. Make sure you have a great week, and I will see you in the next video.